So, Al, in this next topic I want to cover is how these financial markets really function. And a lot of people think it's just random
Hmm.
movement. It's actually strategic, and it's
Right.
actually created by the big money. When we talk about the big money, that's the institutions, the banks, the uh, financial whales of the whole industry, right?
Sure. The
People that
smart money.
the people that have the big dollars, the millions, the billions of dollars. Now, these techniques and strategies that they are using, they're also available to the public, but there's a disconnect. The public just doesn't know that. And you said earlier that a lot of people aren't taking an advantage of these opportunities and they're missing out. And these techniques are learned skills, right? The institutions have learned them and they're also available to us. So, talk about how these financial markets really function, and it's based off of supply and demand, which is how anything in the world moves.
Yeah, actually what you're talking about is a solution to one of the problems that people have as investors or traders. And those two problems, first of all, are this. Number one, it's the emotional impact on making proper decisions. And number two, it's the lack of proper education that's needed to maximize the benefit of the opportunities that are there. And the way you do that isn't to just arbitrarily make decisions. It's not just to open an account and throw money at something, which is what a lot of people do. Education really is something that should be specific to you, and it should actually be a path that you follow, following a set of rules, a step by step process. That's first of all how you control that emotional part of it, but then also on the education part, it's not just knowledge; it's the skills to use the knowledge, but it's knowledge based on what we think cuts out a lot of the clutter, a lot of the confusion, and just concentrates on what is factually important. What moves the price of something? Because there's really two things that are important in any trade or investment. Number one is, where is price going to turn? Because if you can get in, say, at the beginning of a trend, you have the opportunity to have a higher probability of it succeeding. And then the second goal is to identify how far it will go. That's your profit potential. So those are the two key things, which means that you have to identify movement in price. Why does price change? Why does something go up in value? Why does it go down in value? It's like anything else that is involved with anything financial, any market. It's supply and demand. In this market we're talking about, in the financial markets, investment markets, it's buyers and sellers. So if there are enough buyers or enough buy orders to move the price of something, wouldn't it be of value to you to be able to identify where that will happen? And then conversely, if there are a lot of sell orders or sellers at a certain price, which is going to stop the upward movement of something and reverse it, wouldn't it be great to know where that is? That is what our core foundational investment strategy is designed to do. It's designed basically to find something that hasn't happened yet that is going to happen. It's where unfilled big institutional orders are, whether they're buy orders or sell orders. That's going to determine where you either enter or exit a position. And if you can get into something or out at the turn in price, that's where the highest quality trade will exist. And that's a trade that has the lowest risk potential at that particular point, also with the highest probability of it succeeding, which is very important, and then also with a high profit potential, which is critical to being successful on a long-term basis.
Yeah, first you have to identify some of those problems, and I'm glad you brought that up. There's, people have emotions, that's human nature, but you need the education to learn the skills to eliminate those motions. And how you do that is have a step-by-step, rules-based strategy that's designed to teach you to make better investing decisions. And Al, you talk more about that core strategy, trading and investment strategy in these investing classes, and you talk more about the timing aspect as far as how to time the market by letting price come to you, which is basically how to buy at wholesale. Now think about this: buy at wholesale, we do that in our everyday life, and sell at retail. We do that in our everyday life, just like the financial institutions do. So, Al, there's a lot of listeners that want to understand more about this supply and demand, but in multiple assets. We talk a lot about the stock market. It's a great market to be in right now. It's a lot of volatility, which is exactly what you want. There's also other markets out there. You have the futures market and the Forex market. Talk about these different markets, on why the institutions are utilizing these for income, because our listeners want to understand, how can I have the potential to trade and invest like them?
Sure. Well, first of all, you mentioned buying at wholesale and selling at retail. Basically, what that really means is buying low and selling high. And everybody listening would agree that that's what you should be doing. But the truth is that 90% or more of the people listening do exactly the opposite. They buy high and they sell low. And that's because of that emotional component. So, number one, you need to control that. That is part of a plan that we help our students put together, which is that step-by-step rules-based process. And then number two, identify the timing aspect of it. That's the core strategy. And then number three, the different assets. The stock market is not the only choice. Mutual funds are not the only choice that you have. There is a difference if you are looking at benefiting from the markets for short-term needs and for long-term buildup of your wealth. And the truth is, the institutions, the smart money, they understand the value of short-term trading. And if you look at their portfolios and what they're recommending, what they're choosing, what they're buying for themselves, it changes frequently. They don't just stay in the same stocks, the same sectors, or the same industries. There's rotation there based on what might be performing better. And to be honest with you, they buy and sell in such large quantities that oftentimes they're the ones that determine which stocks and which sectors and industries are going to go up or go down. But they also use different assets, and they understand that to maximize the odds of their success, the probabilities, they need to use things that are different than just one or two things like the stock market. And certainly, these big firms are not trading their own money in mutual funds. They're selling mutual funds to their clients and to you, the public, but they're trading different things. In addition to stock, they utilize the assets that Josh just mentioned. The foreign exchange market called Forex, the futures market, the options market. And there's some great benefits there, many more benefits actually than there are in just trading stock or mutual funds. If you're looking at putting a long-term portfolio together, that's a little different strategy. And that is probably going to be a stock portfolio, but one that you manage. You don't just set it up and then let it go, put it on cruise control. But for short-term needs, you need to have something that you can get into and out of on a short-term basis. Futures is probably the shortest term trading vehicle. Oftentimes, people are in and out in a day or sometimes in hours. That market moves so fast.
We see a lot of investors like to use that as a longer term strategy as well.
You can also
in
use it.
Accounts.
Absolutely. You can use it in retirement. We'll get into that in the next segment. But in retirement, you need to not just have some money there, but you need to have that money work for you. In other words, maybe generate some cash off of it. And you can use these short-term trading strategies like futures, Forex, and options to do that. But what we're really talking about are leveraged assets. That in that category, leverage obviously is the big component there, and that is really just maximizing the value of your money. It's capital efficiency. It's controlling a large amount of an investment for a small upfront cost, kind of a down payment. That's leverage. It could be 10 to 1, 50 to 1, 20 to 1, 100 to 1, but that's maximizing the value of your money. It also allows you to take maybe smaller parts or smaller amounts of a larger portfolio and using that to take advantage of the leverage.
Yeah, basically not using your whole portfolio, so you're not 100% invested is what he's talking
Correct.
about.
Yeah, and then also there's great diversification there. The futures market probably is the best overall market for diversification because you have choices there. You have access to the major stock markets that you can trade either long or short. In other words, you can buy or sell. You have access to commodities, to precious metals, gold, silver. You have access to oil, the oil market, to currencies, interest rates, a number of different things. Some of those things are correlated to each other. So if one goes up, another should go up. Some are reverse correlated or inverse correlated, where if one goes up, the other is going to go down. And then some have no correlation at all. So you have some great opportunities there to use diversification to your benefit. And we talk about that in these classes. Those markets, the futures and the Forex market, are also open 24 hours a day. So you've got a lot of versatility as to when you want to take advantage of what those markets are providing.
Think about that. If you work during the day, the stock market is only open 6.5 hours per day, our time here in Minnesota. Now, if you had an opportunity to trade in the evening, how would that impact you? Would that give you more opportunities? And with these other opportunities, the futures market, the Forex market, these are great opportunities that so many I mean, really, Americans are missing out on because they only know stock. Well, here's the thing: you can technically trade the stock market with futures. You can trade the S&P 500, the Dow, the Nasdaq. So you are invested in the stock market. It's just a different asset. And if you feel like you're missing out on these opportunities, it takes action to learn different things. I mean, last week Al's words of wisdom were pretty good. He was talking about yesterday's opportunity is gone, right? Well, today is another opportunity to take advantage of something that's not going to be there tomorrow. Al, coming up next, you mentioned retirement earlier, and that's what I want to talk about in the next segment is 401ks, IRAs, how the average investor can take part in, or I should say, have more control in what their money is doing. So coming up next, retirement techniques and strategies that are available to us, the public. This is Josh and Al with the Retire Young radio show. We will be right back.